let's talk about what we've got here on the radar today. By the way, so we have the producer price index. I was thinking about using what Ivan uses today. I'm going to give FX Street a shot because I've been recommended several times that Forex Factory actually just stinks. So I've used Forex Factory for years, guys. This might take me a minute to get used to, but we do have on the radar today, we have the producer price index year over year, which is going to be coming in pretty soon, and the month over month number as well. And you can see already with FX Street that we've got several kind of several factors here. What's up, Ivan? Ivan, by your recommendation, I think I'm going to give FX Street a shot today, just because I want to see that I get all the numbers. And sometimes Forex Factory just doesn't show all of them. So shout out Ivan, shout out FX Street, and yeah, FX Street team, yes indeed. Okay, so let's talk a little bit about what this PPI number means. Couple things to note. PPI today, I think, actually has more excitement on it than usual. Usually, this is what we have. Usually we have CPI first, and then the next day, or the next, the next days, we get the producer price index. But today it's the other way around. We're pulling a little bit of an Uno reverse. We're saying, nope, actually PPI first, then CPI. So I think PPI going first, do not discount how impactful today's PPI number could be. The market is antsy about inflation. The market is very, very curious to see what inflation figures will come out to be. It will be, I'm talking all markets, right? There's several things that will be impacted by this. The stock market, I'm talking about the dollar index, I'm talking about currencies, I'm talking about gold, everything, okay? Very important. Commodities as well. The producer price index will give us an idea of what the wholesale prices are looking like. Are prices going up on the supply side, on the supply chain, or are they normalizing? And the market really wants to see inflation start to cool off. They really, not only that, you have a market here that, in my opinion, let me just paint a picture. If you get hot inflation figures, I'm going to look at this market as way overbought, okay? But if the number comes in cool, which some people are, or many analysts are forecasting and hoping for, if it's cool, suddenly the market probably could even try to retest the highs and maybe even break out through the highs, okay? So let me be very clear, and let me sun some people in the audience really quick. People are going to have like their opinions. Oh, I should buy this, or should I sell the NASDAQ, or should I buy gold, or should I short the dollar? Listen, guys, none of us have the massive number crunching systems that the economists around the world are using to try and forecast what's going to happen next with inflation. If inflation comes in hot today, the dollar index very well may look like it's going to actually hold this support level and rally higher. But if you get PPI coming in cool, I think you've lost the last leg of defense. I mean, of course, you could have CPI that comes in opposite, but let me just point this out. The dollar is on thin ice right now. In my view, the dollar has seen several, weak numbers. That's not even my view. That's just what we've seen. It's why, by the way, the Edge Finder's been giving us a bullish reading. I'm in profit on that. My stop is trailed into profit going into this news. That's my update for that. I know a lot of traders are watching gold. I already have longs on gold, but my stop is trailed into profit. So that's just some context on that side. But understand that today, if you get, when we take a look at the economic data for a second, and we look at the dollar. Let's take a look at, just go to our Forex scanner for a moment. You'll see that the euro is getting a bullish read right now. It's because most economic data looks pretty weak for the dollar, right? So my point with saying that is, if we go over here, I'm going to actually just do something really quick. We'll go to the top setups page, and let's just filter by major currencies for the currency traders out there. Let's add in our neutrals. And what you'll see is that when we get to the economic data section, there's not really a clear decisiveness for the dollar anymore. For a little while there, the dollar looked really strong because, GDP, PMI, retail sales, inflation was hot. we've lost that story a little bit. Well, we haven't lost the inflation story. The question is, today, do we lose the inflation story? If you lose the inflation story today, what I mean by that is if inflation comes in cool, the dollar is going to look like, in my opinion, a sell against most currencies. If it holds in there, if it's hotter than expected, okay, then I'm staying neutral on the dollar. So I'm tentatively, potentially bearish on the dollar as we go into this number. I'm not saying I'm shorting the dollar or selling dollar, but if you get inflation cooling along with everything else, the dollar story is no bueno.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
If today's inflation data is not favorable to gold and we drop, then I'll take a profit. My first entry is here and my second entry is here, so I will take a very small profit. I actually added a second trade inside of the VIP room yesterday afternoon. So I am long on gold going into this. I'll give you my opinion on this, and I could be very wrong. I'm not a fortune teller, so let me just tell you my opinion. I'm long on gold, and my thought process is this. The economic data, if we take a look at like the economy, let's go here. So ECO, economy, right, has been cooling. If you get inflation hot, what you have in this scenario is stagflation, right? Slowing economy, stubborn inflation. Stagflation is a very bullish environment for gold, okay? So that's positive for gold. But check this out. If you get inflation coming in light today, right? Let's say you get inflation, and we're getting close, so let me not mess this up and miss the news. If inflation comes in light today, I also think gold is not necessarily just an outright sell. I could be, again, very wrong about this. That's why I have a stop loss trailed and I'm in profit. So I'm not gambling on this event. So let me just be very clear. But if inflation comes in low and the economy is also, we know this is our given, right? We know this already. The economy seems to be starting to materially weaken. Okay, if inflation comes in cool today, the Fed's going to start cutting rates. That's also bullish for gold. So in my opinion, again, huge disclaimers here, I think most scenarios, gold continues to trend higher. All right, and the stock market just dropped hard. Gold dropped as well. Oil, let's see what we've got. That looks like probably a little bit of heat in the inflation department. And there it is. The actual came in, the producer price index month over month came in 0.5 compared to 0.3, hotter than expected. The producer price index year over year came in 2.2 as in line with, so this is a hot print. And so there you go. The stock market's down here on that news. Let's see what the damage is in terms of a percentage basis. Yeah, you got about a 0.5% move lower in the NASDAQ. In the S&P 500, you're down 0.36. Again, let me reiterate, I could be very wrong, but this inflation figure coming in hot, I don't actually think is incredibly bearish for gold. So yes, it's dipping, but in my opinion, I think we stay supported and that the gold market continues higher. If I'm dead wrong about that, my stop loss will smack me and say, you were wrong, dummy. In terms of currencies, you got the euro trying to push higher here on the 4-hour chart, looks supported despite the hot print. Again, euro dollar, I think it's just going to come down to the CPI report tomorrow. But GBP, USD, here's dollar yen, just doesn't care what's going on, seems to just want to trend higher anyways. Dollar Swiss, the Australian dollar, the Kiwi dollar. Okay, let's go back to gold here for a second. So here is my view on gold. Again, I mentioned I added a second trade to my gold campaign here. I went ahead and got back long gold. As soon as the Edgefinder produced this bullish reading, I went over to look at the charts. I waited for the pullback with a score of +10. For me, that's hard to ignore with my system. Edgefinder was saying very bullish. I went long, and currently P&L is looking like this. Let's see. P&L, we are up 32.70, let's call it, on the position. So not bad. I will take it. Stop loss, like I said, is trailed in profit. So if this market tanks, we'll make a small amount of money. And if it keeps running, which I think it could, gold might look really good here. Again, as I mentioned, I'm going to keep coming back to it. Even if the inflation number came in hot, I still think that gold looks good, because gold, you're seeing the slowdown in the economy, right? I'll show. Let's go on a trip here. You guys ready? So the Edge Finder, here's the thing. We can go through a couple points here. GDP came in lighter than expected. Forecasts were 2.5. We got 1.6. Okay, that's GDP. Hold that. Next up, PMIs. Look at this. The manufacturing sector came in lighter than expected. Some slowdown in manufacturing. Okay, that's 2. But what about 3? The services PMI repeated the same function. Okay, services section of the economy came in lighter than expected. For the PMIs, right? This is the Purchasing Managers Index. It's like asking a bunch of executive people who make decisions at manufacturing plants or whatever, right? If you ask them about, like, are you going to be hiring? Are you buying durable goods? What are you doing? If they kind of show that they are expecting to slow down a little bit, that's what this is looking at. That's why we keep the PMI data on tap on the Edge Finder for you. Okay, so GDP, PMIs, what else? Well, the jobs market cooling off a little bit. Again, our first significant miss came in on last Friday's jobs number, or May 3rd. We got 175,000 jobs compared to what was forecasted up at, what was it, 238,000 jobs. So what you're seeing here, guys, is you're seeing a story being painted of, okay, the economy seems to be relaxing a little bit. And I'm not necessarily saying entering a recession or anything like that, but you have to start to wonder when the train starts changing directions, right? It's very slow at one point, but it's very hard to call when it's going to stop. So what I mean by that is if the economy is starting to materially slow down, here's unemployment claims ticking higher, right? This is why data matters, guys. This is why we use the Edge Finder on all of the videos. We have to keep an eye on the data. Job openings starting to slow down. Okay, well, what about unemployment rate? Unemployment rate trending higher. Again, if you have this data in front of you, you can start to see what I'm getting at. Wage growth starting to slow a little bit. Okay. So the point here is this. When you look at the economic data as a whole, which is what the top setups algorithm does, is it looks at all of this economic data and it factors in bullish and bearish readings. Sure, inflation being hot might not be the best thing for gold if the economy is strong, because then they're going to raise rates. But if inflation is coming in hot and the economy is struggling, that's a scary environment. And there's a word, you can hear it coming, I bet. What's the word I'm about to say that drives gold higher? Fear. The other one could have been stagflation. Both of those answers would be acceptable, right? Cooling economic data, inflation that doesn't want to go away, and suddenly you probably don't want to buy companies, right? If the market's looking really bad for, growth going forward and inflation's still stubborn, that's not the best for companies, but it's very good. In fact, maybe the ideal scenario for gold, right? There's only one other scenario in which case I think that, maybe gold looks better. And that would be where you have an economy really slowing down and a massive QE campaign trying to save the world, right? Like 2009, remember when gold went like up parabolic because the Fed turned on the printer, but everybody was terrified about the economy. That was gold's like super cycle. Well, we could start to see something big for gold too. And again, that's why I am bullish. That's why I have, money on the table. And there we go. We're back up in the positive today. Stocks are flat. So we've given back, that big downside move has come back a little bit into play. But again, I remain very much convicted on my gold play. I have my risk managed. My stop is in profit. If this thing rolls over and dies, I will still make money.
But I think we're going to have a limited move for now because the most important one is going to be CPI tomorrow. So I think today we're not going to expect that crazy move, but tomorrow everything's going to change. But let's just expect maybe positive news. But if maybe we're gonna see some like crazy hot, like what we saw now, yeah, it's gonna be a different story, and the dollar is gonna gain that momentum again, and the likes of Nasdaq US 30s, they're gonna lose that momentum that we saw at the moment. And at the same time, it means that maybe they will be postponing about the rate cuts, and that is not gonna be a very good thing. And later on, I think in a few minutes, we're gonna have in an hour, I think we're gonna have Powell speaking. So if he saw those news, it's gonna be a different story. I hope maybe his statement is not going to be that bearish, but we will see.
Yeah, and again, as you mentioned, we have the producer price index this morning, but at the same time, we still have the consumer price index tomorrow, which is arguably more usually market impactful, because again, the producer price index gives us an idea as to what the kind of wholesale level, what the supply chain prices are looking like, which usually does trickle into what the consumer ends up paying. So in some ways, I find the producer price index to be very valuable. But here's the thing that I keep coming back to, Kenzo, is, this might not be the best week for stocks. If we get, for example, hot prints on CPI, stock market probably will hate that. But what about gold? For me, I think that there's not really, I said this earlier, and I could be very wrong, and it could, age like sour milk, but I don't see a very bearish case for gold this week. If inflation comes in hot or cold, the given is that the economy is showing signs of slowing. We went through some data just before you showed up, Kenzo, but GDP numbers, jobs data, PMI numbers, they're coming in lighter than expected. And at the same time, what's the bear case for gold? To me, I'm long gold because I don't really see one. If inflation is cool, then people will celebrate rate cuts. And if inflation is hot, people will say stagflation.
Yes, that's true. So yeah, on my side, it's also because if you check PPI previous maybe month or previous event, it's not really that aggressive economic news. Just now, things are not going well. We start to focus much on that, but mostly CPI and not really much on the retail sales, but CPI is going to be the game changer. So mostly, if you check previous, we don't really see those aggressive moves on PPI, but it's going to be very important comparing what we saw today and what is going to happen tomorrow. If they all going up, it's going to be a different story. But if maybe CPI starts to show the signs of going down, which I think is going to be difficult, because if manufacturers or producers are seeing the prices going up, for consumers, obviously they will have to get higher prices, which means consumer price, it will be going up, and that at the same time it's inflation. So it's a bit confusing, and it's better just to wait for those news. But on gold, since they're still preaching about cutting the rates, I think it's very good buy. It's a very good buy. Plus, we still have conflicts and stuff like that, and we have BRICS going on. I don't know if maybe you heard much about BRICS. So that BRICS organization, they are trying to introduce new currency, which might be backed by gold. So that is also a positive thing for gold. So, but we will see what will happen when time goes on. But for now, on gold, I'm actually bullish.
Yeah, I mean, it's a good story. I do want to reiterate to the audience. Somebody asked, Cheryl's asked, am I right to say regardless of the result tomorrow that gold would go up? I'm not quite saying that, because gold can always do what gold wants to do. It could go straight down, and Kenzo and I are expressing our opinions. But as always with this stuff, these are all educated guesses. No matter who you ask, nobody knows what the market's going to do. We're just making our best educated guess based on, for Kenzo and I specifically, we look at fundamentals a lot. We look at simple price action. If you get tomorrow's number just red hot, the consumer price index, I think what matters most, and Kenzo, I'll ask your opinion on this too, it's not necessarily the figure, but how much the Fed feels that they can cut rates or hike rates. So like, for example, if inflation comes in hot, and then what we hear from Jerome Powell is rate hikes are back on the table, then gold's going to go flying down, right? Because rate hikes
Yes.
terrible for the story of gold. So, but the point is, right now the Fed seems loosely willing to basically say we still want to cut rates. We're looking to cut rates. That's like their goal is to cut rates and
Yes.
relieve some of the consumer, but they need to see some of the inflation come down. So I think at worst case right now, the Fed will say we're just going to have to stay where we're at for a little bit longer, which is still fine for gold, in my opinion. But there's always the chance that the Fed says, actually, we may need to rate hike, which would be the incredibly bearish case for gold. You probably see back under the 2000s even, in my opinion.
Yes, no, I really like that. Plus, on top of that, from that question of, I see, regardless of whatever that happens, just to go through that also is sometimes people, they will try, not specifically the individual who asked the question, but when we do the speculation or analysis, even Powell himself, he will say he's waiting for the news. So it's not like maybe we have to know exactly what is going on. Even someone who is in Fed, they don't really know what will happen next. You see, so even as we just do the analysis, which is something that we have to appreciate. So on that, I feel like also the news that we're gonna get, I don't really see them not cutting, because another positive thing is, even though the news were positive, but they were not really aggressively higher, and that it's also a good thing, because it shows that even though we have positive numbers like PPI, the thing is we're not on the plus numbers or double digit numbers of growing. So which means even if maybe inflation is growing or is still sticky, but it's on a very slower pace unlike before, and that to them I think is going to be positive. Even to us, or also on the market, we will see that the market was not really convinced about the sell, because it shows that it's still positive but not really aggressive, and that is also a good thing, you see.
Exactly. Yeah. And, Kenzo, while we're on the subject of all these, inflation figures and Fed speak and all that sort of stuff, we do have, again, Jerome Powell speaking in just about an hour, which could be pretty market moving. Question for you. What else are you watching outside of gold? Any other charts that are on your radar today?
Yes. This week I was actually looking or checking US 30, NASDAQ, actually indexes. So also gold, but I was out on gold because the market was just reversing here and there. So at the moment, I can't say we have any trade. We're just waiting actually until tomorrow. Then it's where we're going to take some necessary decisions. But at the moment, just to stay out of this crazy volatility, I think it's better to understand what's really happening before maybe I jump in the market, because sometimes, especially on indexes like NASDAQ, US 30s, it's like guessing game if maybe you don't really have to wait for the news, especially when we know, I think it's next week or next week, we have NVIDIA earnings. That can also be aggressive. So all those things, I think sometimes you just have to stay out. Then after the news, whether they are positive or negative, then we can jump on the market. But for currency pairs, I feel like it's still not really that easy to trade them. We were on GBP and Euro USD. So we are still on a downtrend structure, but we were just waiting for the news before maybe we look for any sort of a sell. And on this type of a structure, it seems like the dollar can be quite stronger, but we will see if maybe the market breaks out. So for now, I'm just staying out until maybe tomorrow.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.